How's it going, everyone? It's Sam. We are talking about the impending market crash. I'm going to tell you why I think the market will crash or dip down significantly, what I'm doing, and why I'm actually excited if it happens. So, if you guys like this, please leave a thumbs up. I ask that a lot, but if I ask it at the end, there are a lot less people that watch till the end. So, hitting the thumbs up now really helps out the channel. Also, if you want 3 free shares from Webull of stock up to $1,600, you can check out the link below, deposit $100, and get a ton of free stock from Webull. They only have this for a few more days, then they're bumping it back down. At least that's what they tell me. So definitely check it out, and it does help me a lot too, so I really appreciate that. So, why do I think the market's going to crash? What should you do? And why I'm actually excited about it. So, first of all, let's take a look at the S&P 500 over the last year. So, obviously, we have had a pandemic that is a once in a 100-year event. We've seen hundreds of thousands of people die. We've seen millions of people infected. And yet we are up significantly on the year. So we are up about 11.65%. Typically, we see a 7 to 10% rate of return accounting for dividends. And right now we're at almost 12% without dividends even included. So that is a massive return. And we're seeing this in a year that we have had a terrible, terrible event. And we've seen lots of people laid off. So first of all, I think we're up pretty high. I think we're accounting for a pretty strong return to normality. And I think that if we don't necessarily see that, we're going to see the stock market drop off a little bit. Next, we are seeing severe unemployment still, and we are still set to lose the unemployment benefits that we've set in place from the stimulus. So the CARES Act created several programs for unemployed workers. They were able to set up some unemployment pay that was pretty significant, but that's set to expire in December if they don't reach another stimulus. Now, that is a very significant thing because a lot of people are being propped up with that stimulus bill. A lot of people are getting a lot of help. They're able to go out and spend money and then be able to recycle it through the economy. And that's just good for everyone. I mean, whether you believe in the stimulus and the unemployment pay or not, it is helping you in some way or another, if not just through the stock market. It is causing stocks to go up because people are still buying products. We've seen a massive decline in GDP, but these stimulus bills have helped people be able to afford and be able to continue to buy products. Now, the other thing is, we are not seeing any kind of stimulus bill looking like it's going to pass before the election. So I know that we just talked about how unemployment's set to expire. We also aren't getting all the other business funds and other stimulus that could help out a lot of people. The states aren't going to get money, it looks like. Now, there is a little bit of back and forth. For example, this came out just a few hours ago. Nancy Pelosi said that she's optimistic that it will come before the election. Now, they've been saying this back and forth for months. So I think a lot of the time when this kind of stuff comes out, the market goes up, the market goes down, market goes up, market goes down. It's kind of this back and forth of excitement and then disappointment. And I think once it actually is set in stone that we won't get it before the election and that it will take longer, I think that will cause the market to drop off even more. Now, right around the same time as this, we're seeing the number of cases spike up again in the US. So we can see here that we're getting around 75,000 to 85,000 cases a day. And a lot of people are saying, well, we're just testing more. Yeah, maybe, but around late August, I don't think we were testing really any less than we are now. I could be wrong, but we had about a third the cases or half the cases that we have now. I think just people getting back together, kids going to school, people returning to normality a little bit more is causing the number of cases to go up. And you can see this is a pretty significant spike. I mean, just here in Michigan, we've seen a lot of new cases, and I think it's even more pronounced here. But some of these colder states, like Michigan, are starting to see these massive spikes where we're seeing 4,000 people a day compared to 400 a few months ago. And I think this is causing some people to get worried. We're talking about shutting down schools again, up here at least, and that's going to cause some issues with people having to stay home from work or having to figure out plans to have daycare or something like that. So it's causing some issues. Now, we are not the only ones going through this. Europe is seeing huge spikes in cases. Jack Spencer just said the other day that Ireland is shutting back down. You can see Italy is returning to shuttering cinemas. There are a bunch of spikes in cases throughout Europe, and you can just see a lot of different articles talking about Italy closing down gyms, about Europe getting more restrictive on what they do compared to the US, which is kind of the same. So I think we're going to start to see more businesses maybe shutter down again. And really, if they do that, we need stimulus, because otherwise they just won't have any cash flow. They'll still have bills, and hopefully they have money saved up. But if not, that's going to be a tough thing for them. Now, I'm going to tell you about what I am going to do and why I'm personally excited if the market does crash. I mean, if you are close to retirement, or if you are someone that relies on stock market investments for some of your cash flow, or if you're one of these businesses, I hope that there isn't a market crash for you just for the sake of your own situation. But for me, in my situation, I am not close to retirement yet. I'm not looking 1 to 2 years out. I'm looking many years out, and I am excited about this. So we also are seeing that the election is coming up, and there's some uncertainty about that. A lot of people get worried, and there's extreme bouts of volatility around the election. But just looking at what typically happens with different presidents and with their returns in the market. So if I can get the pop-ups to go away, we can see here that generally, no matter who the president is, the stock market goes up. And I've talked about this. It's about time in the market, not timing the market. All these different presidents have caused the stock market to go up. Even Obama, who is very disliked by a lot of people, he took the stock market when it was in a massive dip and brought it up significantly. And you can see here, look at the axis. This is an exponential graph. So it goes up about 10x each of these little marks. So this is a pretty significant amount that this stock market has gone up. And, just looking at the last drop in the market, I started to buy in stocks dramatically. I started to buy in a lot of different stocks, from Facebook to Tesla, and Tesla I bought late, so don't give me too much flack for that, even though it is up massively. I bought Foot Locker, Berkshire, IIPR. They're really just two stocks that I bought that haven't returned to normal. Store Capital I bought in really recently, so I wouldn't even count this in some of the stocks that I bought during the dip. Carnival Cruise Lines is the only stock that I bought that hasn't returned back to normal, and I still think it's a good buy long term. But I've seen a great return of about 30%, not even accounting for dividends, in this portfolio. I want to take advantage of another dip. Now, how I'm going to do this, why I want to do this is, even if we see these stocks do poorly over the next 3, 5 years, 10 years, I think that buying at a low price is always going to be good. So whether it takes 1 year, 2 years, 3 years to get back to normal, I don't care, because if I can buy a stock at half the price, that's going to be a great return over the long run. And I don't really care how it's going to do short term, because I can buy in for a very discounted amount. Now, if you want to see how I'm going to do this, I'm going to dollar cost average. Now, why I'm doing this instead of buying in or waiting for the stock market to crash, I explain this in this video, and I'll link it here at the end. It's shown to be a lot better strategy and return you a lot better over time to just dollar cost average than to wait for a market crash. And I'll link this here in a few seconds or on the end screen, so you can check out this video. I think it's really valuable. And then also, if you want, I did a little bit of a different video here, a little bit more entrepreneurial, but how you can retire in 4 years from 10 cents a day. So that's also a really interesting video that I'll link up on the end screen. So thank you guys so much for watching this. I plan on dollar cost averaging, and if we do see a massive drop, I will probably shovel a lot more money into the market. And that's just something that a lot of people don't understand. But if I'm shoveling more money on top of what I normally would invest, I don't really count that as trying to time the market, because it's just extra money that I would have used for something else that now I'm shoveling into stocks. So I think of that more as just hustling and trying to capitalize on the dip as much as possible rather than waiting for the dip and then investing. So thank you guys for watching this. Thank you for checking out these 2 videos here at the end. Also, if you want those 3 free stocks, you can check them out below. They are a really good value for signing up for Webull and depositing $100. Thank you, and I will see you in the next video. Thank you for hitting the like button. Bye.